Okay, welcome back, guys. So this week going forward, we're going to be discussing supply and demand. Now, supply and demand is a very interesting concept, and it's a very sought after concept on the internet. However, supply and demand is used in many different techniques and variations, which we're going to clear out all the creases here. But before even clearing out all the creases, what we're going to do is we're going to dive into the basics, going into what is supply and demand. So this lesson is going to be the introduction, and we'll go into different types of patterns that you see for supply and demand and the core basics of actually what it means, because that's where all the trading happens. If you do not know what it means, what's the point of drawing it, right? So we're going to go into all of that concept from A to Z completely. So let's start with discussing, why is supply and demand important? What does supply and demand represent? Okay, so if we see this chart here, this is the New Zealand CAD on the 60-minute chart, we see markets moving all around, right? So some people might be drawing supply and demand, saying this might be a supply and demand, okay, right in that area. In fact, I should clean that up. I will make it lighter. Okay, some people say that's supply and demand, but before we even touch into why that's wrong in so many levels, we're going to discuss what supply and demand is, okay? So back to the basics. Supply and demand is extreme forces of the bigger players. Okay? It's trying to tell us a bigger player is present in that area. Okay? Just to put it in a nutshell, that's what it is. Okay, so when you see a bigger player present, what we're actually talking about is, do you see the market when it reached up to this area? It dropped very, very, very drastically. I want you to stop thinking about the chart like that, or in terms of a design, and start to focus on the concept first. We'll go into the designs later, but first thing comes is the concept. The concept of price was going up. Something happened at this price that it made it collapse. Now, how far did it collapse determines how strong this price was. Okay? That's an important factor to us. So if we say this area is important to us, we're going to go into the drawing part later, like I said. All we're doing is, this whole area is important to us. There's something there, okay? There's something there. There's something about the big boy who's a seller who comes in, or the big boy who was a buyer from here finally stepped off the table and says, okay, enough. Or he's afraid of that price. He stopped buying. So whichever way you look at it, there's something happening there, okay? Same thing here. Look at the difference between the way the markets are coming down versus the way it goes up. And also consider always the distance as well. How far is he going? Okay, so there's something important there as well. So the core basics of supply and demand is, if there's something above you, we call that a supply, okay? That's the terminology. If there's something above you, we call that a supply. Because prices, when it goes up, it comes down. Okay, now think of it this way. If you have, cell phones, you have iPhones, right? You have one iPhone and 500 buyers. Do you have a lot of supply? No. You have a lot of demand, right? But the moment you have one or two buyers, but you have 500 iPhones, what do you have to do with price? You have to discount the price. Once you discount the price, more buyers will come. Otherwise, your price is too high. That's the same concept of supply and demand. So anything above you is called supply. Anything below you is called demand. Okay, so before we go into drawing, consider concepts of supply and demand in terms of that ideology of what happens there and why. Okay, so prices are going up here. They're rising, rising, rising. Here's a drawing of that. Okay, prices are rising non-stop, stops here, comes down, reaches this part, and rises drastically here again. So, what do we say? Are we saying this is supply? Are we saying this is demand? Okay, supply being above us, demand being below us, and if the price is right here, should we be afraid of this price where our buyer was afraid? Okay, remember going back to our mastering price action pieces, saying that don't forget the knowledge of what the big boy is trying to do. If your big boy is running from here to here, and then he pulls back from here to here, he's still got power because overall he's maintaining grounds. This is very important. Many supply and demand traders, they forget this concept and they just go into the design and they start hitting trades with their fingers crossed, saying that, okay, come on, man, I'm gonna mark this area right here and saying that's my supply and demand area, and I'm gonna hit a sell from there. Okay, this is just a vaguely one drawn. There's more aggressive supply and demand scenarios where I can show you guys. So, and then the sells don't work, and they're like, okay, it's a hit and miss, it's a numbers game, we'll keep going. You can actually help the numbers game by understanding the flow, why supply and demand occurs. Okay, going into more examples. Let's go into more details. Again, supply is above you, demand is below you. Okay, let's open up a new chart. Let's go into Euro USD, for example. Let me clear this one out. Okay, here we go. So take a look at this area here. Here, the buyers start the market. They start from here, they go up to this area, and then boom, 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 like chop, 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 something around this price they're chopping. Okay, something around this price they're chopping. It does not mean supply is kicking in. Okay, what we're looking for is dramatic events. Dramatic events show us true supply and demand. Okay, so when you see this dramatic event going upwards, do you see any dramatic events coming down? Not much, right? You just got a little bit of pullbacks coming in. So there's no dramatic events coming down. Hence, our buyer is not afraid of anything. He's just been held by a traffic cop that's slowing him down, but he's not pulling back. Okay? Then he goes up again, full throttle, all the way to the top. He gets up to there, and something around this price makes him take a dive. Okay? Now, how much of that dive is happening? Oh, it's like 10%, 15% compared to the movement from here to here. Okay? Maybe 20% dive. Comes back up, no higher high. Comes down again, no lower low. Comes up, no higher high. And then it drops again. Now, this time drastically, showing us that there's something about this price area, right? Now, what happens is, again, supply and demand traders will also eye this area, thinking that this is an area where price might hold again. Okay? Now, we don't want to be using supply and demand to the T. We want to be using supply and demand as a knowledge base that can stop the market. Okay, we'll get into more details of how all this stuff works. So the introduction basically is supply and demand is extreme anomalies in the market that may occur again. Okay, if the buyer or the seller is scared of a certain price, he might be scared again. That's what it's saying. Okay, so if the price is scared from here, if the sellers coming down are scared of this price, and the prices rise dramatically, they're saying that next time price comes down, they'll rise dramatically again. Now, let's put this into a nutshell. Okay, that's a basic way, layman's term to explain it. Price was scared once, he'll be scared again. Now, let's put it into an example, because an example is the best way to cement it in your mind. Okay, think of it this way. Here is the buyers. Okay, these are the people willing to buy the iPhone. Okay, these are the people willing to buy the iPhone. Prices keep rising. That must mean one thing. There's not enough supply. Okay, people want it like hotcakes. Slows down here a bit, and then prices rise again. A lot. That means prices are the phone is still selling like hotcakes. But something about this price drops it for a big discount up until here. Now, did it crash? No, it made it a discount up until here, this price right here, and then after this discount, buyers said, okay, I'll take that price, I'll buy the iPhone again, and the prices started to rise. Now, what happens? Think about it this way. What if you were the one who bought the iPhone around here. Prices rose to here and then it dropped dramatically and dropped dramatically twice. Now, if you bought the iPhone somewhere in here and now your nephew or niece or your daughter or your uncle or some relative or friend is going to buy the iPhone and prices come back up to this price, aren't you going to tell them, no, don't do that? Because I remember 1 month ago when I bought it around this price, they gave a big discount. If it happened then, it's going to happen again. That's how the human brain works, right? Same thing happens is when prices come down to here and then the buyers take it so sharply up. What happens is in the future, if you bought it from this price and you saw after you bought it, price rose so high and you're like, oh, thank God I bought it at a discount. What happens when the prices reaches that area in the future? You're going to do the same thing. Hey, buddy. Hey, niece. Hey, nephew. Hey, uncle. I'm telling you, last time I bought the iPhone for this price at 1.0734, prices shot up dramatically. I don't think they're going to give a further discount from here. That's the same concept. Hence, the supply and demand concept works like that. It works on human psychology of people remember price. People will remember that same spot and remember that, oh my God, it was so drastic last time. It embedded into my brain. Now, if the market is moving like this, like take a look at this one. If the market is moving like that, are you gonna think about anything? Okay, how many forums or the comments section or on the webinars are you gonna talk about this area here? Okay, if I circle this area here, how many times are you gonna talk about that? I can promise you 0 times. But when this happens, oh yeah, you can be assured every trading forum, every news channel, everything is flaring up. Now, if it flares up, that means this price people will remember where it took off from. Hence, that price plays importance into the future because it's embedded into the person's mind that, oh my God, I remember that because it was so dramatic, so emotional, it gets fixed into the brain. So think of it that same concept of in your life, what do you actually remember in your life? Anything that you remember is not just subtle knowledge. The best things you remember comes with high emotions. Whether you're super angry, you remember that moment. You're super happy, you remember that moment. You're super upset or sad, you remember that moment. Anything highly emotional, you will remember it. This causes high emotions. Hence, the memory takes on and further continues. Okay, and hence you'll see this level react and react and react. So supply and demand basically works on that concept. And again, I'm gonna help you refine it so you don't make mistakes like most supply and demand traders do. That's why I put in supply and demand. And when I sold this course, I told you guys, I'm gonna teach you guys supply and demand my way. I'm not gonna just give you guys a box and where you can just hit buy entry orders from here. That's too dangerous. Okay, we're gonna teach you a little bit of method and understanding of how to use this tool to perfection, to your benefit. Okay, so let's go on to some drawing examples. On to the next video. Okay, so let's learn to first draw some supplies. Okay, now before drawing supplies, understand what supply is, right? Like we discussed in the previous video. So understanding what supply is. Now, when you look at this area here, right? Prices were going higher. They got higher, reached this area and had a dramatic drop. Okay, once that had a dramatic drop, would you say that area is a supply? I want you to always refer to things emotionally. When things are flying up sky high like this, all green bars just shooting up hundreds of pips and then shooting down instantly, dramatically like that, do you think that grabs people's attention? Okay, I want you to remember stuff like that. I want you to always look at the situation emotionally and think, is it actually creating panic in the market? Take a look at this. Markets are coming down very, very drastically, indicating buyers are not there so much. right? Compared to the buyers, the sellers came down so drastically, which also means there's not enough buyers to buy that iPhone. Hence, they need to keep reducing the price. Now, how much did they reduce the price? How much is the key? Did they reduce it a little bit more, or a lot? Now, think always like this. Now, what does it mean, a little bit or a lot? Does it have to do with a number of pips? Okay, so if I say from here to here, okay, that's going from 68, 70, so that's 60 pips wide. Okay, so is 60 pips a lot? What does the word a lot mean? Okay, so when I'm saying think emotionally, the reason why this catches our eye, it's because compared to everything else on the left that we see, this is more visible, isn't it? That's what a lot means. Compared to what else you see, that sticks out. Make sense? So keep that in mind. When you see this green upward movement, now that's pretty big move too. But compared to the red candles, that's nothing. Even though it's aggressive and it's gone up quite a bit, but compared to the red candles, it's nothing. When we say this is, wow, that's a lot, this green bar is up here. Why? Because compared to surrounding situations, that is clearly visible. That's how emotions work. This is clearly visible to the naked eye. It's like, oh yeah, I can see it. That concept of, oh yeah, I can see it. Everybody in the world is like, I remember that price. I remember when we were here and then the news kicked in and the whole world went chaotic. Okay? So think of it emotionally. So let's do some supplies. Now, let's do some examples, okay, of supplies. Supplies in the general concept of drawing is rise, base, and drop. Okay, this is the general terminology of what is a supply, which means the market goes up dramatically, pauses a bit, and drops dramatically. Rise, base, drop. Okay, another option of a supply is drop, base, drop. Okay, you might have been already familiar with these terminologies, but we're gonna get to some meaty stuff now. Okay, so these are two supply areas. So what people consider a supply in this industry is that's a supply. That area is important because there's something about that price, and also this area is important. Okay, very similarly to how we teach our support and resistance, right? How much dramatic effect is there? How affected are people psychologically? How much of that price do people remember in the future? Now, when we do it this way, and we say, okay, that's the key. We're gonna understand how supply works. So there's two options, rise, base, drop. Okay, so you don't have to remember these words, rise, base, drop. You don't have to remember that because you understand the logic of why a supply is there. It's because something happens at this price that they have to discount it so suddenly. Always remember at what area do they discount it so aggressively. That means that price, people, human beings do remember that price and they try to trade that price yet once again. Okay? Now, why is supply and demand, working pretty well in the industry? Why does it work so well? Because supply and demand works on this general concept, which the average trader cannot do in real life, but it works in supply and demand. Now, if you take a look at this supply right here, okay? So this is a drop, a base, a drop, right? Dramatic, right? It stops there for a moment. And if we extend this out and say, okay, that is our supply, and I'm just gonna put a rough box around it, then the sells occur around this area, right? That's the general concept of how do you trade a supply. But think of it this way. If you do not have supply and demand and you're just looking at the markets with bare bones, how many people actually sell in a rising market? Nobody, right? They, in fact, when the market rises, they join the buys. This is why supply and demand works so well, because it actually makes you think logically. Logically, as in, if price fell from there, it can fall again. Now, here's the problem. The word can fall again comes in. So there's no logic to it. It's just the right way of thinking, which means you can only sell if there's buyers. And the more dramatic the buyers are coming in, the more people will buy. Hence, if you sell to the buyers, you make money. Correct? You cannot sell with sellers, right? What happens when this big move down here crashes? Who takes the sell from up here? No one. Very few people. Most people take the sells down here. They're too late to the game. This is one advantage supply and demand has over every system or strategy on the internet out there. It puts you ahead of the game. However, with the flaw of, do you know when? Do you know how? Do you know when, which area is actually real supply, which one I can rely on and not rely on? This is where the missing link is happening around the internet. Okay, so this is your supply example. Let's take a look at another supply example. Okay, now you know why supply and demand has a basis in the market, why it works pretty well. Take a look at this one here. Here is a mini rise. Okay, base. Okay, 2 candles stopped right here, 2 candles right there, and then followed by a drop. Now, one can argue, well, that's not dramatic enough. How do I know that this price, if I draw it like that, is going to be fruitful for me? How do I know that's going to work? We don't know that, right? Because that's the missing link. That's the missing link. Do I keep selling it from here? What about this one? Doesn't this look like a very good rise base drop kind of thing right there? The market goes up and up and up and then drops dramatically. That's definitely emotional. How come that doesn't work? You know, the market reacts from it slowly. Okay, so the general question, like I said, if you'll see this around the internet quite a bit, people will say, well, it's a numbers game, you know. So we're going to help you fix that. If you are a supply and demand trader, I'm going to help you look at it in a whole different way. And if you aren't, well, this is going to be new education for you to learn, and it's good. Supply and demand is a good concept to learn. Okay, so let's move that out of the way. Take a look at this. Here's a mini rise. We're working with supply still. Take a look at this one here. We got a small drop, got a small base sideways, a few candles here sideways, followed by further drop. Now, how in the world do I know if this area is going to work in the future? How do I know where to keep my stop losses? How do I know my sell, if the price comes back to this area, is going to work? Okay, if you notice something interesting here, there's few things happening in this market. Buyer's market. Buyers going aggressive once, slows down twice, slows down third time, no higher high, slows down more. But yet, for those buyers who do not know the buy is over, they still look at this area as, that's support equals resistance for me. They still look at this as a buy, while all the MPA students are looking at this as, looks like the market wants to turn around. So we got a buy and a sell battle happening. Well, isn't that a money spot? Using this money spot concept, putting it together with supply and demand, gives you that edge that tells you and helps you with timing a bit. You know, that's why we put timing as a much later course, because you can't do timing if you don't have all the tools available to you, right? So I'm glad you guys are patient. Those of you who are watching this right now, you guys are taking it step by step. And I cannot thank you enough for trusting me to take you in this process step by step of the way. I know it's a long journey, but it's a journey that's going to be so well worth it. Like I said, if I had someone like this to show me a long time ago, I probably won't be here today, because I'd probably have so much money by now I would not even be doing courses. Probably not. I'm not sure. But I'm here now, and fate has put us all together, and let's learn it the right way. Let's do it all in the right way. Okay? So we're shortening your learning curve a lot, and I'm sure most of you guys are already profitable from what I already see, but this is going to help refine it even more. Okay? Let's take a look at some more supplies here. Here we go. Markets are here. Let's take a look at this one. There's a rise here, temporary halt for one candle, and then a dramatic drop. Now, why in the world does this, if I take the top piece of that and I say that price is important, why doesn't that hold in the market? What happened to my sell there? Why isn't that sell holding? Well, let's take a look at these buyers. Buyers are going up, pull back. Buyers are going up, pull back. Okay, let's draw it out. Here's buyers, let me keep this like that. Okay, buyers go up, buyers pull back. Buyers go up, buyers pull back. Okay, 50% pullback now. Then buyers go up. Whoa, he went up further. Buyers pull back less. Buyers go up again, higher. Now, higher high sequence, getting stronger. And then we see this big dramatic drop here. Does that look real to you? No, that's not real. That's not real. That's how we can know probes and fake outs and spikes can happen, because we know these things are not reliable. Hence, the reverse happens. It turns into a fantastic demand, which can actually help you. Okay, now let's go into the next video discussing demands. Okay, so in this video we're going to be talking a little bit more about demand, right? We need to understand how demand works before we can even get into drawing it, right? So if we want to understand how demand works, a couple things, right? Just imagine the price of the iPhone is set to $1,000, right? That's the standard price of the iPhone. $1,000 is the price. From that $1,000, prices get discounted to $500. Okay, but then it gets a further discount to $200. But now from $200, suddenly prices jump back up to $1,500. This people will remember. So what happens in the future once price comes back down to $200? People will think, oh my god, I have to buy it now, because last time after $200 prices went up to $1,500 and I couldn't even get one piece. So more people jump on it, hence taking the price back up, getting a reaction from it. Okay, so keeping that in mind, demand is nothing but that little chunk down there where we say that price is important. That's what demand is. Okay, that little sudden shock is what is called demand. Okay, similar to this. You know, prices were going down for the iPhone, blah, 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 reaches this price, and then boom, sudden rise. People will see that. Hence, this area becomes an important piece for us, which means something about this price where a lot of buyers are satisfied with this price, right? A lot of buyers are satisfied with this price, which means they start buying it. Okay, if they start buying it, then even in the future, they will buy it at that price too when it's in a discount. Okay, well, let me get rid of all this. Sorry about that. Okay. All right, so moving forward. Okay, prices rise higher and higher and higher, and then we're watching the sellers come back down, if they ever come back down to this price. No, they don't come back down to this price. So we want to watch for these dramatic events again and again and again. Here we go. We got in a uptrend. Here's an uptrend. Sellers come down again. Prices are dropping. Now, whether you look at prices dropping from here to here, that's one way of doing it. You can also look at it prices in a hole. Okay, what is prices in a hole? It's nothing but, imagine you're trading a higher time frame and it's like one candle up and two red candles. It's the same thing. Okay, and then one candle up, dramatic rise. Or you can take it in a hole without going to a higher time frame, saying, okay, I can see this massive uptrend with this massive retracement followed by a massive rise back in price. How did the rise back in price happen? Dramatic, emotional. People remember. At what point did the emotional take off? It's exactly at this price right there where the emotion activated. So what people do is they say, okay, this area is a demand area, and they extend it out, saying if price comes back to that area, we will buy it. Okay, if price comes back to that area, we will buy it. Okay, now when we look at this area, a couple things comes to our mind. Okay, if we look at that same big buyer with the same big retracement, 50%, then same big buyer. Now, how much of a higher high is that? Not much. Followed by, wait a minute, my supply is down here. Do I really want to be buying a retracement that comes in almost 100%? Well, if the buyers are still active and you're in buyer's territory, this basically means buyer's territory. If I go to a higher time frame, we will say, okay, well, this is the price where the breach happened. Who started it? This guy started it. So my buyer started it guy is the demand, basically. So price comes back down to the guy who started it, and that guy says, nope, take it back up. But how far does he go? This will even help you with your exits, just to understand the flow of the market. If you hit the buy from here, many people will hit the buy, take it to here, close the trade, and be like, okay, I made some good money, without knowing how far they can take it. Okay? You know, some people do, they buy the demand, they sell at supply, which is they'll take it all the way up and they'll close it here, knowing that that's an aggressive price there where people got scared, and they'll exit it there and maybe even turn sell again. Okay? Thinking that that's a supply. So you have to follow the flow of the market. Okay, so let's do some more examples of demand. We'll go into trade examples later. Next week we'll go into that. But right now we need to learn how to understand what is demand. So let's take a look at some more demands. Okay, what about this here actually? Before we proceed, what about this here? Isn't that a dramatic drop in price, followed by a hold in the market, followed by a rise? Now how come this area, if we extend it out, doesn't hold the market and push it up from this black box? How come that doesn't happen? Would you say that's dramatic enough? Okay, this becomes the scary moment for many supply and demand traders. It's like, well, who am I trading with? The buyers or the sellers? Who am I going against? Am I trading in the money spot? Am I gonna get a spike down? Is this buy still valid? And you know what the reality is? This buy is valid, because this is a spike slash probe. Hence, if I extend this out, it actually works. The problem is every supply and demand trader gets stopped out first before it works again. Okay, that's the problem. How do you know there's going to be a spike? Now that's a different question to ask. When you ask the right questions, you get the right answers. Okay, we're going to cover that too in the near future, of how do you know when a spike is going to happen and why is it going to happen? Okay, stuff like this. This is very important. You know, we discussed this a bit in correlation, right? Why a spike can happen. That means there's not enough sellers for the buyers to buy again. Not to mention, look at the momentum of this to this and this to this. Look at how high that is. It's not so much of a higher high, followed by almost 100% retracement coming in really fast. It almost goes to tell you, well, is that really a high or is that high fake? Okay, so all eyeballs are supposed to be here to see, am I gonna get a higher high or am I gonna get a whole V formation coming in? Okay, so spikes can be expected considering my higher high didn't happen. Now it might be like, whoa, you know, eagle eyes, you know, you're looking at bird's eye view. How can you even spot that on the live market? That's so hard to see. And I get that. That's why I'm trying to train your eyes to look at more detail, but also not get too consumed by information overload. Okay, just hang in there with me. I'll take you step by step on what to focus on, and and how, basically. Okay, so let's take a look at some more demands first. Let's keep going. Let's keep going. So there was a hidden demand here, which is confused by people. Okay, like, oh, is that the demand? Or demand works in two ways: drop, base, rise. It's basically the opposite of supply, right? Basically, they're saying this is demand, this little extreme area down here. The other demand is rise, base, rise. Okay, this can also be demand in the near future, thinking that, okay, well, prices dramatically rose from there, hence that price is an important price. People will remember that. Okay, I keep using the word people will remember that emotionally, this and that. I don't want you to get fixated on patterns. The industry works on patterns, not you guys. You guys are better than that. Step outside the realm of pattern and understand the logic of why a pattern is drawn. You need to be a step ahead of the game. That will put you in the 5%. Let the 95% draw their drawings. Take a step forward, okay? Fight it. Fight the urge of drawing a pattern. I know it's human instinct to look for a pattern, but fight the urge and try to understand the concept. Okay, let's take a look at some more stuff here. Now, going forward, here's a rise. Okay, if we take a look at some rises here. Rise, base, couple candles here, rise again. So if I take this area and I extend it out, how come prices don't react there properly? Okay, if I just do it like that, take the entire tail there, and it still's like, oh man, that's a spike out. Not only is it a spike out, well, how much does the buy go? Okay, so before I end this right here and say you can draw your supply and demands, I'm going to give you guys some homework, okay? Please don't take it the wrong way. I'm not a professor in school or I'm forcing you guys. But think of it in a very logical way. When you work on your trading this week and you spot these areas for supplies or areas for demand, think of one simple thing. Am I working on an area where the markets are going to reverse, or am I working in an area that's just a speed bump? And how do I know? I want that curiosity to boil in you, because next week we're gonna open all that up and to tell you which ones you want to be working with, which ones you want to avoid, which ones you know is an area to exit. You don't want to use it for entry, but you can use it for nice exits. Okay, again, will help with the timings. And as we get into timing areas, it'll almost feel like, oh yeah, I know this, because it's going to be going from correlation to supply and demand to support and resistance all put together in the right frame for the right trade. And you'll be like, I'm going to take it exactly to that point. I'm going to take, if I'm doing my sell from here to here, I'm taking that sell from there, I'm going to take it exactly to this point, to this demand where I know I can exit my trades. You know, timing, you know, the art of timing, right? Okay, if we want to do buys and you're in the buy from here, you know that in your buy, you want to take it up to this recent supply area there. Like, okay, I'm going to exit my trade there. Okay, I don't care if it goes a few pips higher. That's not my concern. But I'm going to take majority of my profit where I can see there is space for me to exit. Now, the whole point of entries and exit only come with, how do I know this area is strong? How do I know this area is weak? So think about it, ponder on it, because going forward, I'm going to start giving you all these things to ponder and think about. And what we're going to do is we're going to start making you what traders do. I'm going to have you guys start thinking for yourselves. Okay? In the Mastering Price Action course, I held your hand. Okay? The beginning of correlation, I held your hand. From here on out, I'm going to start to let go one finger at a time. Okay? I'm going to let you guys stand up and take control. Okay? And I know you guys can do it. If you need help, we're here. You can fall as many times as you want, but we're here to help, and we're here to make you self-sufficient. That's the goal. Okay? So just hang in there. Put in the work required, practice, and I promise you I'll get you through. Cheers. See you guys next week. Okay, so welcome back, guys. Now, in this week, we're going to be covering a little bit more on supply and demand exits, right? So let's say you're in a trade for supply and demand for exit. How do I know which level is good to exit, which level is going to work, and which level's not going to work? Okay, so to do this level, you need to have a very good understanding of buyers and sellers territory in the Mastering Price Action course. If you haven't done that, I suggest you recap that before covering this. Okay, the next thing we're going to do is we're going to step up the game a little bit to make it a little bit more advanced. As mentioned last week, I'm going to start letting go one finger at a time, and I'm going to give you something today that is going to change the way you look at the markets even more. Okay, so before you can truly understand the logic of what areas will work and what areas won't work, let's go into some examples. So let's take a look at this. So see, here we have a supply. Okay, let me move this into let's change the color a bit to make it nice and beautiful looking. Okay, we have a supply right there, which means that is a strong selling point. Okay, it's a drop, base, and then drop, which means market spent a little bit of time there and then it dropped further away from there, making this area quite important, right? Now, how would I know that this area is going to hold or not hold? Okay, first things first comes in is, what's the territory? Okay, once it broke to the bottom side, it also generates a seller territory, right? And if we go into the question of who started it, we're like, oh, well, this guy started it, right? He started it. That would be the circle. So seller's territory, and that's the case. Now, if that's the case, and from the 2 time frame rule, we say, okay, now we need to go to our lower time frame or anything like that, and we need to look for buyers, all right? Because you need the opposite party to come in. Now, this is very critical. Again, focus as hard as you can. Imagine you're a retail trader. Just imagine for now. Markets are going down. Very, very aggressive. They just started. No one sells here, right? We all know that. But when it pulls back up, and then it goes down, nothing. Oh my God, it's a sell. 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 More and more activation as it's going back down, because they're going to use this as reference, the first move. And then it goes up again. It's like, yes. It's going to be another sell. It's going to be another sell. Sell. Excellent. Okay. You get the logic? Now, let me ask the same concept of the same situation here. So let's say you're looking at this whole scenario with this logic of how people do not anticipate, they participate. If that's the case, when this market was going down this far, I'm going to draw this line here to here, and then these green candles come upwards. If I take this and I move it to the side, what do you think the public is thinking? Sell or buy? Sell, right? Because if you're thinking if the public is thinking sell and no one's jumping in on the sell or on the buy side, and they're all on the sell side, and you also want to be on the sell side, you're never going to make any money. You're never going to make any money, which means you need something more enticing that says, I don't know what's happening. It's a sell. Stop loss. Oh my God, what's going on? Oh, I guess it's a buy. So did anyone buy here? No. Did anyone buy here? No. All the buys are happening up here. You see what I mean? So if you want to become a seller, you need first the buyers to chase you. Okay? So you need them to first remove their orders from the sell side and jump to the buy side, because they're participants, they're not anticipants. Once they join you on the buy side, now there is some money on the table for you to make. If you're a seller, I'm a seller, and everyone at Forex Watchers is a seller,
Well, how are you gonna make any money? Whose money is are you gonna win from? You need the opposite party. How do you get the opposite party? Entice them. Entice them. So, if I was to go down to the 15-minute chart, okay, and I scroll back a bit, I'm on one time frame lower. Where we go? Here we go. Okay, 15-minute chart. Looking at the move, and we're like, okay, I know from the 1 hour this whole thing was one move. It was all a single push. But then I'm on the 15. I'm like, oh, I see some demands here. I see a demand there. I see a demand here. Well, which one is gonna work? Well, let's first take the logic of when this first move up happened. Yeah, I can see that. Oh yeah, maybe that demand is going to work, right? Okay, it's like, oh yeah, that demand looks like it worked. That drop, base drop. Yeah, that sell works. Look how far it works. You want to know it when you want to really make money? Stop this itty bitty sells and think logically. Of this buyer that stepped in is not enough. It's not enough because people, even at this stage, are still looking at this as it's a sell. It's a sell. But then once the market comes back down and starts to go up again, they're like, oh my god, going up, going up, going up, going up, going up. Stop loss for anyone who's selling. Going up more, like, oh my god, I guess this is a buy. Mentality changed, flip. Buy side. Now you have an opportunity to make money, and now you're looking at, okay, now show me some supply and demands that can work. This logic applies both to entry and exit. Let me show you another example here. Okay? Let me do this. Boom, 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 boom. Okay. This whole thing is a down move, right? Down, halt, down, 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 down. It gets all the way down to here. Okay? Okay. I'm gonna go up. I'll leave it here. Okay. I'm gonna label all the demands for you, just for the sake of drawing. Okay, let's say I'm a drawer. I just love drawing. You know, like, I can't trade. I just want to draw. Okay. Demand there. Sorry, supply there. I'm gonna draw all my supplies. Okay, that's probably a supply there. I'm not sure, but that's probably a supply there. I'm not really sure, but that looks like that's a supply there. I'm not sure, but I think that looks like a supply there. I'm drawing everything I can, possibly, to say which ones are supplies, right? Now, in this whole process, how do I know, even if I'm the worst drawer on the planet, how do I know what's going to work and what's not going to work? So I want you to start thinking. When this market came down as this whole red chunk, you extract it out. When the market goes up from here to there, okay? And you pull that out and you put that right there and you're like, is anyone actually buying? Is anyone switching directions to the buy side? And if they're not switching to the buy side, that supply is weak. But the second time around, once it goes down and then it goes up more aggressively, you're like, okay, I'm sure that's gonna have some buyers in there now. Which means, okay, if there's more buyers in there, we're looking for our next spot. Is it this one? Can I use this as my logical area? Or can I use this as my logical area? Okay? Depending on how you draw it, right? And they're both correct. They're both correct. You see, some might argue, is that really a demand? It's not just the sake of supply and demand, just for the sake of drawing it and saying, okay, well, if you give me some rules, Naveen, I'll just try to follow the rules. No, I don't want you to follow the rules. I want you to follow the logic. How can money be on the table for you to take? Okay, and this is the concept. So sometimes this will happen and you'll have a supply here. Sometimes you'll have a supply, but then the first move is going to be like that and you're like, oh, I guess I can't use that supply yet. I need to use a one higher because I don't think people are enticed yet. Which means now it's subjective. I can't use the first one, but maybe the next one. Okay? I know it's a little bit more advanced. It's a lot more advanced actually. But this is the logic of how to think about going about things. Okay? This is not taught in the industry because they don't want you to think like this. Okay, so same process. This looks like a proper supply here. It's a rise, hold for a second, drop. Okay, if it's a rise based drop, how come my market doesn't hold properly here? Well, that's because you're looking at this whole thing as that's one move down, and that's not turning people buyers just until here. It's not turning people buyers. Does that make sense? So if it's not turning people buyers, then you want to see at what point do they get enticed to switch to the other side. Okay? So let's go into some more examples. Now that we've understood the logic of why a supply and demand should work, we're going to go into how do we use that for our entry, and how do we use that logic for our exits. And we're going to split this up into some examples for supplies and for entry and exit, and some examples for demand, entry and exit. Okay? Okay, so in this example for supply, entry and exits, right? So let's take a look at some of the supply levels here. So let's say this is a downward market coming in, and I'm gonna like start noticing all the supplies, right? I'm gonna start taking this arrow and start drawing it. Here's a rise, base, drop. Here's a drop, base, drop. There is a drop, big base, drop. Okay, there's a drop, small base, drop. Okay, there's a rise, base, drop. So these are all areas here that you can use, right? Now the question comes is, well, which area can we use? Okay, and what happens to the areas that we don't use? Are they going to be in use in the future? Okay, you'll hear this terminology of, in a supply and demand in the curve, right? Supply and demand curve, like this being the most extreme price, this being the other extreme price, the middle price is being the most accepted. Okay, this is something, okay, we call this the mean, okay, which is the average price right here. Okay, and then over here is when way too much supply is there. Over here is when way too much demand is there. And they say the best supply and demands are in the outskirts. Like these are the best areas, usually speaking. Now, but they never say why these are the best areas, right? And they just say this is when the supply and demand goes out of balance. Okay, I want you to just understand this logic. If it's a seller's market, by the time the prices get up back into that area, people do become buyers again. Hence why a sell becomes easy. You cannot understand the concept of money. You cannot make money from the people like-minded. You can only make money from the people going in the opposite direction. Okay? So I just wanted to share that with you. And the same happens is if the market is going upwards from here, for example, he went all the way to the top, right? Let's do it properly. Like that. He went upwards. Well, by the time prices get lower and lower and lower, they're coming down and down and down. So a demand right here is not going to be so good. A demand here, not so good. A demand in the middle is a little bit better, and the demand lower and lower and lower is even better. Why? Because people have switched biases by that time. They're like, I'm not buying anymore. No way. It doesn't look like a buy. I'm turning seller. If they're turning seller, that activates your opportunity as a buyer again. Okay? So just keep that logic in mind, and we're going to go into now looking at some entry and exits for supplies. Okay? So let me just clean this up real quick. Alright. Okay. So all these supplies that we've labeled out, okay, I'll just put some little boxes up in there. Okay, that one, got a weird one there. We got a decent one here. Okay. And all these supplies, we're looking at the market coming down at full force, and we're like, okay, well, do I prepare for a sell here? Okay. Do I prepare for a sell there? Do I prepare for a sell there? What do I do? How do I do it? Or am I supposed to extend this out because nothing touched it, and I prepare for a sell here? How do I know? Is it here? Is it here? Or is it something as extravagant as, well, nothing touched this, so we're going to keep extending it out until the whole, we end up 10 years later, we're like, oh yeah, remember that box 10 years ago? You know, you want to stop avoiding stuff like that, avoid doing stuff like that. And I'm going to explain to you exactly why. Exactly why. Why certain things from the past can come back to work and why certain things don't. Okay. So let's start with some of these. Sorry, I'll put this one back here. Let's start with some of these. Why should this one work? Let's start with that one. Okay? You see this movement here? It just starts from here and then he goes down. He breaks it. That means it's an important level. Something got broken, right? We call that the breach, right? So that breach happened, and this is your support equals resistance. The guy who started it is that supply area. That's the guy who started it. And now all you want on a lower time frame is to look at this pull back. Now this is the December 1920 area. Let's go on the 1 hour and let's take a look at this on December 19 and 20. Oh, here it is. Let me do Control G. December, sorry, 1920 area. Let's take a look around that time. There we go. Okay. So now, don't forget this piece here. Don't forget that piece. I'm going to extract it out. Let's draw the first greenish area here. How high is that green area? He goes from here to here. Let's put that right here and saying, does that make you want to turn buyer? You as a, if you were just if you were following the market and you're just a follower, does that make you want to turn buyer? Well, there's support equals resistance and all that stuff. So according to support equals resistance, it should sell from here. So you're not in any hopes of buying yet. In fact, you're like, oh, this is supposed to be a sell. I'm going to sell this because that's how traditional support resistance taught me. And as you're selling it, it's like, it's not, okay, I'm going to put my stop losses just here above my recent high. But then suddenly it goes up and you're like, oh my God, oh my God, oh my God, stop loss. Oh, I guess it's not a sell, it's a buy. Look how sharp this green candle is. Oh yeah, I don't know why I'm selling it. I should be a buyer. Maybe it's a bottom of a range, Maybe it's going back up. Or maybe that's the end of the trend. Everyone turns buyer at this stage. Now this stage, which now confirms the idea that people have switched their objective to the opposite end. They're trying to become buyers. Now you look for, show me something on the left that I can use as reference point. So something on your left at that stage brings you this purple thing that you had already drawn on your 4 hours, right? If I precises it a little bit like that to include that piece there. Okay, that gives you this area of your area for entry is going to be somewhere around here. Okay, and this generates your high probability trades, because what if you were to just look at this one and say, okay, well, there's a level here too, well, why don't we use this one? You can, but look at the reaction off of that. You're not going to really make any money. You're going to get a reaction, you're going to be like, well, it works. Yeah, but if it works but it doesn't make you money, don't chase it. There's no point. Okay? So avoid those stuff. What I'm trying to get you to do is avoid these itty bitty little trades here that does this stuff. These little itty bitty little trades here that reacts from it but doesn't actually make you money. Just has a small reaction. Okay? You want to watch the ones that can potentially turn the market. Because they're the ones who are the most powerful. Okay, so that comes to your entry. You want to see the opposite side get involved. Now, what about the exits? Let's go back to the 4 hours and take a look at this. So, your entry happens on the second push up, where people start to get excited and they're like, oh, I guess it is a buy. It's starting to get higher and higher and higher. But now, what about my exits? Does my exit have to be at a demand area, which is something that's going to stop me below? Or can I go further? Let's take a look at this carefully. So I'm gonna keep the arrow there. I'm gonna go back to the 1 hour. I'm gonna show you that area. Come on, there we go. Sorry, let me just load it up like this. Excuse me, I think I'm a little sick today, so my voice is a little bit out. But let's take a look at this here. Okay, so the first move, right? The first one that came up, as it reacts off of its little supply here, it stops at its demand below and saying, okay, no more. Okay, that's its demand area that's gonna say, okay, enough, you can't go any further. But it can't go any further because there's no buyers. That's why it stops there. But you're in a downtrend, don't forget that. Okay, so if you're still activating from this area, what you're actually looking for is a possibility for a lower low. Okay, now use this as an example. Here's a downward move here, from here to here on a higher time frame. Let's say in the 4 hour, that's one piece. But on this time frame, you can see all sorts of supplies in here, right? You got a supply there, you got a supply here, you got all sorts of supplies in here. But now, the first supply, we cannot use this because the price is coming up so quickly. But that, if we draw it, and I pull this out, and I pull this out, okay, it's a retracement, but it's a retracement in a single go. In fact, people are looking at this like, oh, good, good, good. Support equals resistance, I'm going to sell it. They haven't turned buyer yet. Okay, now you look at this as it comes back down after that, right here. Nothing's happened. Goes back up very aggressively, very struggly looking. Nothing there. So, are you still turning buyer as a retail trader? No. Comes back down. Okay, then it starts to go up, now causing panic and stop losses. Now people turn buyer. As now people are turning buyer, this becomes more and more valuable to you because when you sell from these areas, are you so concerned about demand holding you? No. But if you do it in an area that doesn't make sense, demand is going to hold you like that. It's going to stop you from moving. Okay? You see the logic between which ones you should use and which ones you shouldn't? Don't chase these little itty-bitty profits. Let them go. Go for the move that makes more sense because there's people on the other end. Okay? Let's take a look at some demand examples. Okay, so in this video we're going to be discussing more on the demand side of the logic, right? How do we know which demands to let go and which demands to use to enter to actually understand a buy is in motion and not like that. So here we go. We have let's start it from the basics. The move moves up here and we're like, okay, according to buyers and sellers situation, it's like, okay, he broke above this. That's a breach, so that's buyer's territory. And if that's buyer's territory, the guy who started it, right here. Okay, simple as that. Let's go into a lower time frame. So I'm going to go one time frame lower. I'm going to scroll to that area. There we are. Okay, now I see a demand right here. We've got a rise, base, rise. There's a demand right there. Now this demand looks fairly nice. If I would have bought that, could have made some money, right? It looks like that, doesn't it? It's like, oh yeah, so easy, so simple, so clean. Okay, but now buying this demand, this one happens to work, but does it take off? No. Okay, these are one of the rare occasions that the demand on the first try will work. Okay, and even if you do buy this, we might be thinking, well, maybe this supply is going to stop me, so I need to exit right here. Okay, so that's like, well, what am I making then? Just a simple 2R here? Okay, let's take a look at it in a different way now. In this process where the market goes up and it starts to pull back, okay, I'm going to draw that line of a pullback. Does that make you turn seller yet? No, because it's the same area. To them, oh, that's Support equals resistance. Why should I turn seller? I know it's obviously a buy. I can clearly see it. So why would I be a seller? I'm a buyer. So if you're a buyer, I'm a buyer, everyone's a buyer, well, how are we going to make any money? So the big boy needs more sellers. It's not ready to go yet because there's not enough sellers. Okay, what happens after the next stage as the prices start to go lower and lower and lower and lower? But look at this. Just lower, low enough to cause panic and make people say, it's not a buy, it's a sell. Okay? It's not a buy, it's a sell. This is what's going to do is we're going to be looking to the left now and saying, well, is there anything here that we can start spotting our eye now, saying that I need some demand right now to take care of me. Okay? So we got a demand right here also. Right here. Okay? You activate the demand from there. Okay, the reason why I drew it like that, let me show you. In case it's because it's like, well, why so many candles? Why'd you take the tail? Why'd you take the body and all that stuff? Let me show you on the 1 hour chart. Okay, it's just a drop, base, rise. I'm just containing that. That's all I'm doing. Okay, if you want to take this whole thing, you can do that as well, but that's just not necessary. What I mean by the whole thing is, if you say rise, base, rise, you can do that as well. But yeah, I'm just doing it for precision. I'm just taking this area here. Okay. So again, I don't, and also the whole concept of this is I don't want you to focus on supply and demand. You know, I'm going to teach you better ways as we get further and further. But I want you to look at supply and demand, knowing that there are areas where the market likes to react from. Okay, so I want you to know that stuff, but I don't want you to change the way you think on how a trade works. Okay, like I said, I will, as time proceeds, as we go into more and more videos, I'll teach you better ways to do things. But this is just to straighten up your logic, because many of you guys are coming from a supply and demand background. So if you are, then you know, props to you, because you got a head start. But at the same time, this is how you filter it out to make sure you get rid of all the nonsense. Okay. Anyways, so markets are coming down lower and lower. Now you're like, oh yeah, I can do this. But now I don't care about the supplies that can stop me ahead of me, because I know I'm at that stage where I can actually allow the market to kick off. Okay, you see the difference between the profits that you can possibly make here versus you can make here, trading this stuff, right? Looks a lot better, doesn't it? Okay, so that's why your exits can go much further. You don't have to exit based on your opposite direction, which is if you're trading the demand, you don't need to get off at supply. But if you're trading your demand earlier with no logic of why that first trade has to happen, then you got to get out at demand, at supply. Sorry. Okay. All right, so let's take a look at another example here. Let me go into a higher time frame, because I want to show you something that I know is going to start coming up in questions. So let's take a look at something like this. Okay, let's take a look at this piece here. Drop, base, rise. Okay, if I contain that drop, base, rise and extend it out, I'm going to be like, okay, well, if this is buyer's territory right here, because it's something broke, and for me, for me to be a buyer, I need sellers, right? So I'm going to go down to a lower time frame. I'm going to look at that area. Where are we? I'm going to look at that area and saying, okay, at what point are they starting to think about sells? They're like, okay, they're coming down here, they're coming down here, they're coming down here. They're like, they're still buyers, because they're looking at this as support equals resistance and stuff like that. So they're not thinking sells yet. But then the moment it jumps up here this high, with that goes where the wick is, and then it pops lower like that, they're like, oh my god, it's not a buy, it's a sell. This gets ready for you to be like, oh, well, now that I got the sellers, let's prepare. Let's see what all areas we have, and we can take the one from the higher time frame, that which we just did, or we can start to make lower ones. So like, maybe this area here, We just start preparing and saying what area can they come to, which we can take advantage of, and saying, okay, we're going to use that area for supply and demand. Now, notice you don't get an opportunity in either or almost, because this is a little bit still far away. Even this is far away, but yet the trade still works. Okay? Because if you're thinking like the way I'm trying to teach you here, it'll almost look like, well, then if that's the case, if this is a buyer's market, I need the price to always come down very, very low for me to have a trade. And that's what I'm actually trying to tell you guys, is you need a trade to come down so low for the demand to be a real demand. And that's not going to happen. Prices can't always come down like 70-80% retracements, right? So what do you do then? Can you just rely on strictly supply and demand? No. Supply and demand, just like everything else, is a tool. Just like support equals resistance, you still have to read the market. Okay, you still have to read the market. Okay, so if I say this whole thing is a single move here, there to there, okay, here's a supply here, but this supply is in the middle of this move, right? It's like right there in the middle of the move. But why does that one work? Well, it's because look at these buyers coming in full-fledged. People are still thinking sells, but then as the buyers get more and more aggressive, this is changing the people's perspective of, I don't think it's a sell anymore. I don't think it's a sell anymore. I think it's a buy. The more aggressive the candles look, the more they start thinking in reverse direction. Because they want to follow it. They want to chase it. Otherwise, there's no Ferrari coming up, right? So they want to really speed up the process by doing that. Like, oh, yeah, okay, it's a buy. That concept, if you can grasp that concept, that here is where the people are switching directions, and you say, for me, I know from a higher time frame, I drew my line here as that's my support equals resistance. And that's the guy who started it, right? Let me take it to you the 1 hour to show you. Okay. Where's that line? Where'd it go? Oh yeah, here. Sorry, that candle's not green here, but if it was, let me see. I'll show you in 30 minutes. Sorry. Okay, where are we? It's right here. Okay, you see that? That would have been your recent break. And after that, we have a break, but no lower low comes back. No lower low comes back. No lower low comes back. So it's like all of this is probe area. That's your recent break only. And if that's the case, and that's the guy who started it, people will start freaking out after they're seeing the move starts going up very, very aggressively. So we want to read this market as best as we can to see, you know, if I put time frame aside, if I put currency pair aside, if I put supply and demand aside, can I still trade? And that's what we're trying to gear you towards. Okay? So you're at the stage where you're looking at supply and demand, and now you're noticing that there's an area here for demand, there's an area here for supply. All these things have logic to it. Will it work, will it not work, will depend on how you read the market. How far to take that trade also depends on what's the situation. What are we working with? Okay, so if I was to say this whole thing is an up move, all of this, for example, just for a second, notice this 30-minute chart. So let's say I cover this time frame, and I say this whole thing is one move. Let's say it's one, everything is green, 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 green. Okay. Now along the way, we had some on this time frame. Okay, on a higher time frame, it would be all green. On this time frame, we had an up move, a pullback, up move, a pullback, and up move, followed by a crash later on. Now this up-down movements is going to create people to continue to do the up-down movement, okay, to follow it. They're going to continue, oh, give me a pullback, I'll buy it. But as this pullback starts to crash to a point where this doesn't look like any logic anymore, and they're like, I don't think that's a sell anymore. I don't think that's a buy anymore. It's going beyond that. That must be a sell. And as you get that, grasp that information, you're like, perfect. I got my drop, I got my base, I got my rise, I got a demand in here. And you're like, this now has a higher chance of succeeding. Okay, I don't need to get off at my supply. I can go further. Okay, when I say further, higher high potentials. Okay, so it's concepts like that. You want to know the logic of the market to use supply and demand. Okay, so we're gonna leave it to that. I need you to look at this stuff, practice this a little bit more. Again, like I told you guys last week, I'm gonna start letting go one finger at a time. So this stuff may seem a little bit difficult, but if you practice it, you'll truly notice that it's not difficult. It's just saying, show me the opposite party. Master that for this week. Master the idea of, is the opposite party there? Yes or no? If it's not there and they're selling and you're selling, there's no money to be made. It's too high risk. The market will poke. It'll pop, it'll swing at you. Okay? And next week we're going to go into some examples, some more examples on supply and demand, supply areas, demand areas. Put that together with buyers and sellers and all that stuff. We'll go into a little bit more detail. Okay? See you guys next week.
Alright guys, welcome back. Now in this week we're going to be talking about how we're going to be using a story to get the logic idea even more cemented. Now, supply and demand is a core concept that works in our general life as well, right? You know, when you go to buy a house, you want to find the lowest rate as you can, but also at the same time at the best location and stuff like that. You don't go and buy a house as the housing market is just at the all-time high and the house is like at $5 million instead of 300,000 and you're like, oh, perfect, let me buy it at 5 million. No one does that. You know, if you know a certain, for example, an iPhone costs $500, you're not going to go and say, you know what, let's buy it at 1,500. No one does that. Okay? So what we're going to do is we're going to bring in real life concepts as supply and demand, and we're going to bring this into a chart, because a chart is not something you and I move. It's something that the big boy moves, right? And if the big boy is moving the chart, everything that we see, as we've discussed before, are nothing but receipts. This is the pattern of what the big boy is doing. So let's imagine that big boy is just one individual. Okay, without even going into a lot of individuals, let's imagine him as one individual. Let's say that person is you. Okay, now I'm going to use the word a phone, a smartphone, for buying and selling, but you can change that word to whatever you want. You know, if you're into shopping, you like Louis Vuitton, you can say a Louis Vuitton handbag. If you're into sports shoes, you can call it, you know, your Nike shoes. You know, if you're into, you know, musical instruments, say this guitar, you know, whatever it may be, you give it that product the name you want it to give it to make sure it makes sense to you. Okay? So let's bring in the story. Now, let's start from up in this area here. Okay, we're going to first go with understanding the story first. So let's start from this area here. So the price of, let's say, a phone, okay, sorry, let me start from here. It'll make more sense. Okay, so the price of a phone reaches a price of 1.3960. Okay, if I want to make it simple, let's say the price of that is $1,000. Okay, just to keep it simple. So the phone price is $1,000. Now, when prices move up so quickly, very, very fast, without focusing on location, where, how should I get in, forget all that. Prices jumping up ultra fast, think to yourself, wow, many people really want to buy this phone. It reaches all the way up into this area where it takes a temporary halt. Now the halt seems to be like, looks like the buyers stop buying the phone, but at the same time, the store isn't giving much discounts on it either. You know, a slight pullback kind of concept. Store is not giving isn't giving any discounts either. So what we're watching for is not just the degree of pullback, but we're also watching for how it pulls back. Look at the sequence of it. It's like, the store is so confident that it's not giving some discount. Now, who knows more about the buyer? People like us or the store? Doesn't the store know more? If there's people coming in, why would he give out discounts? It makes no sense. For him, it's like, well, people are buying it, keep raising the price. keep raising the price, keep raising the price. So what he does is, as he gives a little bit of discount, let's say 5% discount, right? He gives a 5% discount, buyers jump right back in. Look at the aggression of how buyers jump on that deal, which means that buyers still want this product. They slow down a little bit, so the store owner reduced the price of the phone and people start jumping back up on it. The price gets reduced more, and again a jump back up on it. Now this moment you can see something like this is happening. The buyers are buying it at a less and a less of a discount. They don't need more of a discount, but they are willing to get in on it at a less and a less of a discount, which means the buyers are coming in hot. So the store owner will do the obvious thing. You want to make money in business? Keep raising the prices. People still want it like hotcakes, right? Isn't that, we go to the Apple store, you see the iPhones just keep getting more and more expensive every year. Why wouldn't they? It's just business logic, right? So when you see this concept going up higher and higher and higher, they reach this phase right here. Okay, now the prices have become $5,000 for this phone compared to what it was down here. Now they become $5,000 and instantly there's a huge discount. Now to us that's like, what happened up there? Why did the store owner suddenly give out a mass discount? What in the world happened? Sudden buyers jump right back in. They jump right back in once the prices reaches the same area as it did before. Okay, same areas as it did before where the buying started going phenomenally crazy. That same area, the buyers kick back in again saying, I want this, but this time they're able to fuel prices higher than when the store owner started to give a discount. So would you think the store is still happy with the product? Absolutely. So he keeps raising the prices. Now, what's the problem here with raising the prices? Okay, he's up in this area. People aren't really buying it. It's very expensive. We're reaching $9,000-$10,000 for the phone now. It's becoming very expensive, but he's not giving a discount either. So every time he tries to give 1-2% discount, buyers come back in. He's like, oh, if that's the case, I don't want to give a discount. A little discount there, buyers come right back in, and then he starts to notice his trend. Buyers are willing to buy it for less and less and less of a discount. This gets him in on it, saying, okay, demand is picking up, prices start to rise. Now we're approaching $12,000. Now notice the difference here. At $12,000, sudden spike down, big discount. Okay, 10-20% discount there. Buyers jump on that action. Again, a big discount. Almost equals. Like, what's going on? But then buyers are sitting at the same area willing to consume it back up. And then again, a discount. Buyers jump right back up and we're like, the store owner notices this rise as well. It's like people keep gobbling this price up. It's not that it's a high or low, but it's how quickly it gets up there. It's the speed that makes the difference. Okay? So they're buying it up again. Prices this time get higher again. Now notice the threshold of the higher high sequences. Okay? Now this store owner seems to be having a good time with this, with the sales of this stuff, selling his smartphones, but it's starting to reach limits where maybe the buyers are slowing down, because notice how his ability to give discounts start to increase. Now he's giving more and more discounts. They're coming in very, very hot to the same areas where they used to be. They go up again, make a new price up in that area, but then followed by that, they make a dramatic drop. Now this dramatic drop does not even stop at the last area where the buyers went crazy and ballistic. Now if they didn't drop to that area and hold in that area to go ballistic again, this is the sign for us to see like, whoa, how come he gave such a big discount and no buyer stepped in? That's our first sign of something's wrong. Maybe these phones are now overpriced. No one wants it at $20,000 anymore. It used to be $5,000. It used to be very, very cheap. Now it's like $20,000. Who wants that phone? Okay? As prices go back down, as discounts, some buyers step in. Do they take the market back up? No. Prices go back down again, struggling, more and more discount, and then prices stabilize again, and then we see a surge of buyers again. Surge of buyers coming up, but then they're slowing down. Some little discount. Surge of buyers coming up, followed by a massive, massive, massive discount, which means all the buyers have been used up. Okay? At least buyers for that price high up there. Okay? Now, in the trading world, they can call this, the price needs to be back at the mean. The extremes are prices that are unacceptable. This is how supply and demand works. But I want you to use a story to understand that concept better. We don't need to go into the middle is the mean, the outer extremes are where prices are imbalanced and all this stuff. Forget that jargon terminology. Just think. Change the word phone to a word that you like. Give it your product and follow it through. Remember, the focus is on the speed. How quickly do the buyers gobble it up, or how quickly does the store owner give a discount on it? That will start to give you a trend of something is wrong. Because a store owner can literally feel buyers are dying. We need to get a hold of that rhythm of, if I can see the store owner struggling and giving out bigger and bigger discounts and more aggressively, we can start to see that I think buyers might be running out, and there's a higher chance I'm going to be right with that information. Okay, let's go into the next example. Okay, so in this video, we're going to be looking at the sell side of things. We're going to be looking at a perspective of a store owner giving out discounts after discounts after discounts. It's almost like gauging momentum, but it's putting a better spin on it, where it gets you not to just understand, the rubber band man, how far is he running, how far is he pulling back, how far is he running, how far is he pulling back. This is basically upping your game to understand how trading actually works. Because when you think about trading, right, what is the big boys' job? Are they actually trading the markets, to turn a profit between this price and that price? No, they're not. They don't really care for that stuff. That's speculation. That's what people like us, that's what we do. We want to pull money out of the market. What they generally do is, you're a buyer, I'm a seller. They want to give you the most expensive price, and they want to give me the worst price. That's what it is, right? So they turn a profit by giving us and fulfilling our orders. Their job is to sell to us, just like our job is to buy from them, right? Where are we going to get our orders from? It comes in from the banks and the big boys. So their job is to, people want to buy, fill their orders. People want to sell, okay, fill their orders. So if their job is to just fill our orders in, so they're making money off of this supply and demand concept. Just seeing, if people keep buying, okay, raise the prices. If people stop buying, okay, lower the prices. Okay, just imagine, take a moment and imagine. Now, you guys came in through the MPA course, right? So the MPA course, you guys probably paid anywhere between $200 and $500, for example, okay, depending on when you've joined. But from the payment that you've made for the MPA course, what if suddenly I said the price is now, $199? Is that much different from a 200 price range if you came in from there? What's that going to create in you? Is that going to create desire to buy it? Now, the lower I keep lowering the price, it used to be 200, now it's 199. Okay, 150. Okay, 100. Okay, $20. The lower the price comes, the higher the demand kicks in. Okay? The higher the demand kicks in, the quicker the demand kicks in. But it's working strategically to not, if the demand comes in at $20, is not to just keep it at $20, because, you want to play that game of supply and demand, right? So I'm just giving an example of something that you've been recently involved with, such as the mastering price action. So bringing back your product into the picture, let's say we're going back with the smartphone. So we're going to say the smartphone, the store owner starts to sell it like hotcakes, okay? Which means start to discount it like hotcakes, which means he has a lot of it left, but no one seems to be buying it. If no one's buying it and he keeps getting rid of it, what happens here? Some people try to buy it. Okay, but followed by that, aggressive buying right here. Followed by that is like, okay, discount, slow discount, slow discount, slow discount, slow discount. Do you think the market's clear for a lower low at this area? No, it's not going to easily make lower lows after that area. The seller is testing the market, trying to see, well, do I need to collapse my price even more, or are people willing to buy? Because people were willing to buy here. Okay? So around this area, some buyers are starting to come in. Once again, an aggressive discount, and then buyers kick back in. They're like, okay, I want it. Again, around this price, we start to see a struggle of the buyers saying, still, man, price is still too expensive. Now, all this action is happening in the same area where this action happened last time. Now, I want you to stop focusing on precision. Is it exactly this price? Is it exactly that price? Stop that. Stop focusing on such precision and start to understand the logic. Why are we having some reactions at this price? Is because, think about it in your own mind, right? Think about it in your own mind. If that phone was $1,000, for example, from $1,000 it became discounted to $500, and then after $500 it became $5,000. You're gonna remember that day. What's gonna happen is the moment the further price moves away from an area, you will remember that price and be like, oh man, I remember last time when prices came down to, $500, it took off really, really high. This gets buyers going. Okay? Now this shows you clues of how many people are willing to buy. There are people there out of, fear. Oh shit, if I don't buy it now, then it's gone. I need to buy it. So they buy it. But you're starting to see the resemblance of, doesn't look like the store owner is happy, is it? He still starts giving aggressive discounts. Aggressive discounts means no buyers. Market keeps coming lower and lower and lower and lower and lower. Stabilizes here a bit. Aggressive buyers come back in. Not many. There's a battle where the seller's like, maybe I don't need to give discounts anymore. The buyers will come back. Come back. Some more aggressive buying comes in, followed by a halt, which means this high was never breached. Okay? They tried to raise prices up here, comes down. Tried to raise prices up here, comes down. Tries to raise prices up here, discount again. Prices get up a little bit higher, exhausted, discount again. Okay? That's the concept of probes, right? A probe is basically, it's the last attempt of any last people who are willing to buy it. If it doesn't take off and it collapses back inside, that means no one wants it. Okay? Then it goes down for a aggressive sell functionality again. Okay? Comes down to here. Some aggressive buyers come in. Discount again. Some slow buyers come in. Little discount buyers come in again. Little discount. Now notice this phase is doing this concept. It's like, oh man, looks like the buyers don't want this. This might go for another sell. But at this point, the phase changes a bit. There is a buyers and sellers struggle here. Now, for all of us watching this thing, we're like, it doesn't make any sense. I thought this was going to be a sell because it's showing signs that the big boy and the store owner just wants to give discounts after discounts after discounts, and less people are willing to buy it at a higher price compared to before, right? That's how a downtrend line is drawn. But this thing gets accompanied by, remember last time when prices were here, when it was discounted, everyone bought it like hotcakes. Remember that day? That remembrance comes back. It comes back. And our job is to see what happens in this remembrance area. Okay, not jump in. It's what happens in this remembrance area. That's the problem with supply and demand traders. They just jump in. They're like, okay, well, that's it. No, you got to understand what's going on. Not only just that, you want to put the whole context into play. how aggressive was the discounts? Are the discounts slowing down? Or are they still aggressive? Yeah, they're still aggressive. Okay, let's see how people are starting to buy from here. Does the buyers come back? Whoa, look at that aggressive discount again. But now this time buyers gobble it up. Like, whoa, what is going on here? The buyers are willing to take the discounts at a worse and worse and worse price. Okay, they're willing to take discounts at a less and less of a discount, and they're taking it higher high, taking it higher high. This gives us signs of what's going on. Could this be the end of the seller revolution, where the buyers no longer, the store owner no longer needs to give a discount? Could that be it? Okay, this is what we call the V formation concept, right? Like, is that the V formation right there? Okay, is that the turnaround in the market? Okay, same thing happened here, right? Is this the V formation? Okay, but with the V formation, you also have to understand is, well, where's the higher lows that were rising up here? Nowhere. So that V formation accompanied by a massive downtrend, it's like, I don't know about that V formation, man. This one looks a little bit more promising, but not that one, because that one still says, I don't think no one wants to buy it anymore, because it comes from this story of everyone got rid of it. So is this V formation real or fake? Could it be just bouncing because of this? So anyone who's strictly a supply and demand trader who activates the buy is in for a treat. You know, that's like, oh man, that's a loss. That didn't work out. Okay? But down here, it starts to react, but then they don't know if they need to hold on or not. Because every time it goes up and comes back down, goes up and comes back, they're like, I guess I need to get rid of it. Okay? But if you use these logics to your advantage, you start to get an upper hand on, actually, what is going on here? What is going on here? So let's continue reading this market. Okay, so the buyers keep coming in at a higher and higher rate. They don't need so much of a discount anymore because business is good again. The psychology from this past moment kicked in. Okay, watching the markets go up and up again. Just like we have buyers, you know, the buyers use the same psychology. Remember this price? The sellers also have the same psychology. Okay, remember when prices got to here, a big discount happened? Well, maybe we're going to get the big discount again. Remember this price right here when prices went up and then a big discount happened? Maybe we're going to get a big discount again. So why keep buying it at a higher rate? Right? So the same concept happens for these guys too. It's the aggression of how much of a discount happened is what gets embedded in the memory. Okay? The human mind remembers those moments because they're all about deals, right? They're all about catching opportunities. That's how the human brain works. Opportunity, opportunity, opportunity. Okay? Where is my chance? Okay? So when they think of that, well, why would they keep buying if they know last time it gave a massive discount at that price? So maybe you just wait. That prices will drop again, right? All right. So it comes back into this area. You're seeing buyers come in, buyers come in. Now, speed, healthy, every step of the way. Speed is healthy. Every time the seller gives a discount, the buyer gobbles it up. Seller gives a discount. Sorry, my mouse is acting weird. Let me clean up my mouse a bit. 1 second. This Apple mouse makes this. Okay. Every time a seller gives a discount, buyer gobbles it up. Seller gives a discount, buyer gobbles it up. Gobbles, 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 gobbles. Discount, gobbles, gobbles. Slow, slow, slow. Discount, gobble. No one. Discount again. Gobble. No one. Crash. Do you see the turn phase happening here? From a buyer that starts to slow down to the V formation to the test to the drop. Now do you start to understand why the technical language is the way I've given it? What's a V formation? What's a slowdown of the rubber band man? It all revolves around this concept of, can you understand how prices play a role in the market? Can you watch this with an open eye while still keeping your minds open about this guy and that guy and saying, I wonder what people are thinking at this stage when they're buying this phone for a more and more expensive price. I wonder what the store owner is doing with it. Okay, when you start to read the market like this, you have the upper hand in identifying what's my big boy doing. Okay, just by simply drawing lines like that or like that is not going to get you anywhere. It's not going to get you anywhere. You need to read the market to its absolute best. This way, you understand what your big boy is actually doing, as if it's one individual, right? Okay? So treat it like that. It's one individual. What would you do with him? Would you buy? Would you sell? What would you do? You know, look at this. Aggressive selling here. Aggressive, aggressive, aggressive. Same price again. Gobbles it up. Now, this is the price that came in from last time as well. Okay? It's like, oh, that guy again. I thought in supply and demand, if we use an area once, then it's weaker, right? No. You need to understand the story. What's going on? Why? Is it going to stop here? We don't know that. We don't know that. We have to start to look at traits and be like, well, what's he going to do from here on out? This is how you play it safe. Otherwise, it's all aggressive and it's just a coin toss and saying, come on, risk to reward, probability game. But if you read it, you eliminate your chances of losses. Okay? Or you decrease them dramatically. Okay, so massive, massive discounts here. Discount, 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 gobble up. Some discount, gobble up. Now look at the speed and distance the gobbling is going. It's like, they're gobbling it up at less of a discount every step of the way. Well, what does that mean? That's a higher high sequence, right? Higher high sequence. Now, over here, doesn't it look like, well, isn't that a running man slowing down, and then that's a V formation, that's done, that's a full rest? He should collapse. No. Remember this, you got to keep an eye on the story of the gobble up. So this is going to give you that little advantage of, is it supposed to drop, or what's it supposed to do? Well, one thing is, this is an important key price. Okay? And if you're starting to understand the logic of when this gobble up happens, you're like, oh, look at this overall, they're also accepting less discount. This is the overall behavior. This is the immediate, sorry, let me move this. This is the immediate behavior. You're like, okay, I'm starting to see a pattern here. But still, I can see how strong this came down versus how strong it's going up. They're gobbling it up. Prices drop again, gobbling it up. Remember that price when I got a discount. Remember that price when everyone bought it last time. Maybe they'll buy it again. Remember that price when there was a huge sale during Christmas. Maybe this Christmas as well is going to be a sale. So people line up. Right? Now this time around, when the prices come back down, there's your little V formation right there. But look at how aggressive it gets gobbled up. Right there, that little piece there. It's like, is this guy still alive? Could these buyers be still willing to take a buy? Okay? And if so, well, how far can my prices go? Can I actually cross this? Okay? So I want you to start practicing these concepts and the stories. We're going to go into the technicals, why, how, and all that stuff a little bit later on. But I want you to first take this week to just cement this as hard as you can and learn to read the market for what it's doing and use a product that you know. Be familiar with the market in the language that you can understand. Okay? And I'll see you guys next week and we'll go into this even deeper. Cheers. Okay, so last week I dropped a bomb on you guys on trying to understand the difference between how the buyers react and the sellers react into this thing. We're going to spice it up a little bit more. Now we're going to jump into the idea of, do you understand why there's a 95.5 concept? And if you need to have a 95.5 running at all times to make this game more interesting for the bigger players, then you need that dash of evil. Okay? The reason why I'm explaining this, there is a different science and meaning to it, why this happens, but I'm bringing this in because most people in life feel like they've been cheated from the bigger players, or they've been taken from the government and this and that. So this story, the way I'm bringing it up, is going to be easy to relate to and understand. Hence, it's the language I use for all of my students. But in reality, the science is a lot different of why this happens. So just hang in there with me. I'm going to go through the story phase of it. It will make sense, and we're going to use that story phase to go forward, okay? So this does not mean turn bitter and hate the big boys, but it's just teaching you the concepts. Now, so understanding if the market is right there, right? As soon as that red bar comes down like that, it's like, oh, that's seller's territory now. A breach just happened. If that's seller's territory, the guy who started it seems to be that guy up here. If I can get that arrow in there. Yeah, that's the guy who started it, right? That's where it went all the way up and then came crashing down. Let me go into the 15-minute now to take a look at that. On the 15-minute, all we need now is to see the opposite party come in. Okay, so if we're looking at this in terms of supply and demand, we're looking at this as, okay, massive discounts were given around this price. People start buying it, and they start buying it pretty well. But look at the way they're buying it. Goes up, pulls back a little bit, goes up, pulls back a little bit. And then every pullback, look at this pullback, 5-10%, the next pullback, 30%, and then followed by that, a pullback of 200-300%, all right? Our V formation, as we call it. But if the V formation comes in, which means mass discounts are being passed out again, how did the buyer come up again and so high? Okay, so we're going to mix this concept with understanding of you need a bit of manipulation in the market. Okay, that's the dash of evil that's required there. This will help you understand once the dash of evil comes in, what happens to the human logic. Okay, we're going to mix the dash of evil logic together with supply and demand, and it will all make sense. Okay, so store gives out a massive discount. Okay, people start buying it. Store gives out a little bit of discount again, but not so much because they know people are buying it. They buy it again, and they were willing to buy it for a higher price. Store's like, not many people are coming in. Let me give a little bit more discount. They're like, okay, some more people start buying it, but he cannot cross the previous price. And then store's like, uh-oh, I can notice no one's coming in. I need to give a lot of discount. Now, after giving a lot of discount, price is supposed to collapse because no one's buying it anymore. The buyers have run out. So why in the world did this happen all the way up here again? Okay, you've seen any of those, when you're walking down the street, sometimes you see those hustlers shuffling cards and saying, hey, it's so easy, or they put 3 cups and 1 ball inside and say, just find the ball, it's so easy. And then one person will find the ball, they'll give them their money, they'll double up their money, and then say, you can do it too, it's so easy. So that person who actually buys it for the first time is someone from their team, right? Think of it as a similar situation. Now, if all the buyers are running out and that there's a selling person, someone who needs to sell at a higher price, what he's going to do is he can artificially inflate the prices to make it look like everyone's buying this. And what happens at that moment, because it makes a higher high sequence like that, everyone's like, oh my God, it's going up more. I need to buy it now before I lose my Ferrari, because this causes panic. Look at the speed it goes up. Okay? It causes panic in the market. That traps the people. That gets them stuck in the situation because now they got the worst price ever. Right? It's like getting the absolute last buyers. They're like, everyone else bought it, but I need to get in some more. So they get in the absolute last buyers for a higher price. And then the market starts collapsing afterwards. Okay, so this is the traditional formation, which goes up into legs and legs and legs. Then you have a V formation. It's supposed to roll over from here, but yet it goes up higher. Now, you want to use this concept of why this happens and when should this happen with the idea of, are there enough buyers in here to satisfy the seller? Imagine you are the seller, right? And you're looking to sell to buyers. You only get satisfied if you have enough buyers. If there's not enough buyers for the amount of orders you're carrying, then you're going to be in a loss, right? You need to take your shipment out and pass it on to the customers. Otherwise, you're stuck with a shipment that's going to get old and it's going to expire on you, right? Okay, so we're going to use that logic of there was not enough buyers, hence their artificial inflation comes in to get the buyers to come in by force and by using their emotions, and then offloading the rest of your goods and saying, okay, good, close shop. We're going on to the next product. Okay, makes sense? So in this whole situation, we're going to go into the next example, and we'll do a couple of examples here so you get an idea. We'll do some sell side and we'll do some buy side. Okay, to the next video. Okay, so here's a sell example. I chose a different time frame as well just to show you how this thing works. Now let's say this market comes down heavily right here. We're looking at that as seller's territory, right? That's the area where the breach happened, and that's the guy who started it. So let's take a look at this on the daily. So if I can find it. Give me a second here. I went all the way back to 2014, I think, for this. I was scrolling on the weekly. Okay, here we go. So here's the market here saying that's the seller territory, and that's the guy who started it. Okay. So when we see this information, we're now saying we're looking for buyers, right? As a store owner who's selling, they're looking for buyers. So the buyers are coming in. They're coming up here. Let me expand this out so you guys can see it better. Okay, so the buyers are coming in, and they're coming in from here. They're coming up, they're pulling back. They're coming up, they're pulling back. They're coming up. There's that V formation there again. They're like, okay, there's a V formation. That means it must be a sell. But yet the sell comes up a bit higher. Why? It's because we have to understand, was this buyer enough? Now, how are we going to understand if that buyer is enough? Well, let's start to understand it as if we're selling. Once the sell is coming in, okay, pulls back, comes in again, everyone's like, oh my God, that's a sell. Pulls back, comes in again, makes lower lows, everyone's selling, right? Those who got into the sell late, when this green bar comes up, okay, around this area here. 1 second. Excuse me. So once the green bar comes up here, they're still like, I think it's still a sell, man. I gotta still sell. So they're not really turning buyers on this first green bar that's coming up. They don't care about that. And then the market goes back down. They're now more certain about selling. Okay? Their mindset is still set on sell mode. Prices get back a little bit lower. They're confirmed, oh yeah, that's gotta be a sell. They're coming back up again. They came back up to the same area where they thought it came here last time too. It's gotta be a sell. And you got prices went up a little bit higher, and it made a V formation there. You see how people didn't switch into the buy mentality quite yet. But it's only after this spike up happens where people like, oh crap, stop loss, or the idea for sell gets removed from their mind. They're like, I don't think this is a down anymore. And then all the stuff that they didn't notice start to get noticed. Like, oh yeah, you see that double bottom? The double bottom happened. Oh, you see this higher high sequence coming in? Everything starts to make sense to them that this is no longer a sell, it's a buy. And that's what makes them hit the buy up there instead of preparing for the buys down here, right? No one creates the trend. Everyone follows the trend. Okay, that's how most people are, right? So we need that. This is the dash of evil coming in. So the buyers come in one more time to gobble up at a higher price. When at that point the seller's like, okay, sufficient. I can now get rid of these orders. People were buying it at a very expensive price, and then comes price collapsing. Okay, so on to the next example. Okay, so here's an example of the buyers, right? So let's say I go into the 1 hour to show you the buyer's market here. Okay, I've already marked the area for you. Where's the 8th? Give it a second. Oh, there it is. Okay, you can see as the buy comes in really hard right there, breaks that area. That's the buyer's territory, and this is the guy who started it. Okay, we're gonna go into the 15 to take a look at that area. If I can get that area back, of course. The 8th. Okay, there we go. So now this is in relation to the opposite of the sellers, right? So if we are a buyer now, let's say we're the people who's buying. Now, what do we need for us to buy anything? I cannot buy from another person that's trying to buy it. That's just illogical, right? It's like me trying to buy it up here when everyone else is buying as well. So it's like, that's not going to happen. So I need sellers, all right? I need someone to sell me whatever they have. Now, let's say the reason why this thing went up so hard is because between you and I, we want to buy 1,000 iPhones, for example, 1,000 pieces. And because the supply is so short, we're like, come on, man, I'll give you $200 extra. No one's willing to give it to us. I'll give you $300 extra. We raised the price so quickly, but there was no one willing to sell to us. That's why the price went up so fast. Now, keeping that in mind, we started to get some people selling to us 1 piece, 2 piece, 3 piece at a time. And then we got some sellers coming in. Okay, that's the first time we saw some sellers, and we're like, oh man, I really need these. We gobbled it up. But then it was not enough. Remember, we need 1,000 pieces, and we got like maybe 100. But that to many people looks like it's a V formation saying that we're gonna buy it. Problem is, we can't buy it at this expensive price. We can't afford 1,000 pieces at that price. It's too expensive. So what we do is we play the negotiation game now. The negotiation game is, you know what? We're gonna act like we don't want the product anymore. That's gonna cause some store owners to be like, we gave him a discount and he's still not buying it. 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 More discount. He bought a little bit. More discount. Okay, we gobbled it all up completely. Okay? So you see the speed it came back in? Now, this right here at this stage where it looks like, could that be a V formation right there? Could that be the area where it pulls back to and then takes off? No, because it's so high up in the area that we're not interested in it. Okay, that's one way to look at it. That's story A. Story B is simply saying, if I'm a buyer, I need sellers, right? Now, if this happens in the market, no one is selling. Okay, I don't want just the store owner himself. I want the entire world, the whole Craigslist to come at me. Okay, I want everyone to sell it. So what happens, right? Think of it this way. If I tell you that on Amazon, baby shoes are the best sellers, everyone's gonna be like, okay, it's not a big deal, right? But no one does anything about it. So I go onto Amazon and I start selling baby shoes like hotcakes. Okay, selling baby shoes like hotcakes. What happens next is then the trend continues. Every Tom, Dick, and Harry starts jumping in. I was like, oh, he's made a fortune in selling baby shoes. I want to do it too. And then everyone starts to hop onto that bandwagon, right? This is how fashion starts. This is how culture starts. This is how religion starts. This is how everything starts. It's just a matter of, hey, work for him. It's going to work for me. But since I got my proof by looking at him, I'm not going to take the risk. I'm just going to copy and do the same thing. Okay? Now, here's the thing. Here's the thing with that notion. Is in that same concept, when you're thinking like that, if you're a buyer, you need sellers, right? But before you have sellers, just imagine it this way. Imagine it this way. When this massive buy happens, baby shoes, what do you think people are doing? Oh, I want to do baby shoes too. So they're trying to buy as well. They're trying to buy as well. Market pulls back a little bit. Do you think they're away from baby shoes or they're still looking at baby shoes? They're still looking at it because they look at the guy who started the baby shoes he started from here. And look how far he took it. So this little pullback here is nothing. They're still interested in baby shoes. But the moment, but the moment it starts going lower, I think the baby shoe industry is collapsing. There is no future in this baby shoes. That's like saying, I'm gonna buy real estate at the highest price possible, and when it takes a little dip, we're like, it's okay, it'll come back. And then it takes a further dip, now panic sets in, everyone's going in for a foreclosure. Okay? That is exactly what you want as a buyer. You want the panic to set into the veins, to the gut of the people. You know, that's why I've named this topic, with a dash of evil. Yeah, I can just hear you guys in the background going, no. So I'm just kidding. But it's just a story to bring it out because it's very easy to relate to and understand because this is how normal life works. Okay, and this is how supply and demand works too. Okay, so this whole functionality happens. Once this happens down here, you start to see prices getting gobbled back up completely, and you start to see the markets resume from down here rather than from up here. Okay, this gives you a better understanding of, is it going to pull back more? Okay, now the question might be, well, when can I get in? That's not the concern right now. Right now is, do you understand when not to get in? Okay, we're going to take it from there. Okay, on to the next example. Okay, so in this example, we're looking at a 4-hour buyer's territory. I've put it in for you right over here. Okay, that's the 4 hours buyer's territory, followed by, that's the guy who started the whole show. Okay, in this buyer's territory, we're looking for obviously the opposite party. We're looking for sellers to come in so we can eventually buy. Now, here's a problem. If you're counting sellers from here and you're saying, now that's a seller, that's a pullback, that's a seller, that's a pullback, that's a seller. Okay, V formation. Well, that V formation doesn't work right there. Okay, if you say, okay, well, that's a stop loss. Okay, here's a real V formation. Okay, I'm going to pull back and then I'm going to buy it. Well, that buy doesn't work. Also, it comes down even lower. But then if you look on, the buy still works out though. But why is it all the buy attempts are not working out? It's because the buy is not enough from the sellers. You need the sellers to come in. Okay? So here again, you're the person, you and I were looking to buy 1,000 pieces of cell phones, and we're willing to pay a higher and higher and higher price. And at this point, we're still willing to pay a higher price, right? We're still up in there. So if we think just in a simple story, is up at this price, everyone is a buyer because everyone's looking at this like the market's going up, it must be a buy. If we move it a little bit further, they're still thinking it's a buy. If we move it like that a little bit, they're still thinking it's a buy. Why? Because if I put the line right there, wouldn't that be support equals resistance buy for them, those basic technical traders? So they're still looking at it as a buy. It's not until there's some sort of mass panic in the market, okay? He tried to make a lower low and he went up. It's like, could that be a real sell in there? I don't know. It was too short, too small for people to notice. And as we go further, you can see for the longest time, this area has been holding, right? It's been holding, and then kaboom, a drop below it. That's going to get people's attention. That's going to get people saying, well, look how long it took to go up from here. He never went up. Now it's coming down. I think the buy is dead. It must be a sell. And then people start thinking sell biased. For you, that's fantastic because you're like, good. Not only do I have the store owner selling, we got every Tom, Dick, and Harry selling to me. And now you can come in and say, good. Now that there's a lot of competition in selling, I can buy it at a very low price. Okay? So now what we're looking for is the patterns to appear. Now,
Sellers are coming in, they're pulling back, they're coming in, boom. It's like, okay, is that my V formation? Can I hit that for a buy? Absolutely. Absolutely. Okay, any test from that V formation for a buy takes you right to the top. Okay, let me move this, sorry. Takes you right to the top to your take profit area. Okay, but then he still doesn't really make a higher high, so it's still a confusing state of mind. It's like, is he still needs to go down more? Well, I made some money on the first trade, but what's happening? Why is he holding still? We know it's definitely buyer's market. Let's see if he wants to come down again. Okay, he goes down, pulls back, goes down. We're like, nothing really. Is that the next V formation there? What's going on? Now we have to read it in terms of supply and demand. We're like, okay, the high became lower, which means the buyer was not interested, but the seller had to give a discount to attract more buyers. But over here, we're noticing the buyers are buying it at a higher and a higher price every time, as if they know the store owner will give them a discount, but they're still willing to buy it at a higher price. But they're fighting the battle. So the store owner is not letting too much discount in, and the buyers are willing to buy it at a higher price, but then they let go once they reach a certain area. That's how a wedge is formed. Okay? It's like a wedge situation here. Okay, however you want to draw it. It's like that, where it's starting to squeeze. A squeeze happens because of that reason. Okay, we're seeing this pattern now, so we're like, can he actually make a lower low and then go up? Is that lower low possible? Or are these signs of, I think my buyer is there, I just think he's trying to fill in more orders, which means now it's just a matter of time. Okay, we're going to watch it closely, closely and carefully. Got another spike down here, and then it prepares to go. So it's like, that's the V formation there. Boom, goes up. No higher high again. Reaches back to your profit area, but no higher high. It doesn't make brand new highs. It's like, what's going on? What's going on? Comes down again. Comes in, but look at this. Look at this design here. Okay, leaves you a big wick and then starts to come in hot. Very, very red bars, right? Okay, do you think that might get people interested in selling again? Maybe, but we know our buyer keeps gobbling up the price from this area, like as if this thing now has turned into a range. Prices never went higher, prices never went lower. This is turning into a range with the idea of reading through it and understanding the situation all along the way, and you just read the entire story from within the range. Okay, and that activates your buys. Okay, so it took a while to get through to it, went through all that situation, and then the buys finally happened. Okay, so not all the time will it happen like that. There are times when the buys are just so powerful and they'll have enough. For example, if I say that's buyer's territory, and we're like looking at this, we're like, okay, well, that's the V formation. The test didn't take off from here. He came lower. But that low, if we still look at it, it's like, man, that's so small, that lower low. I don't know if the world panicked into selling in that. Because it's so high up there, everyone's still looking to buy it. So we don't have sellers that we can buy from. Right? So if there's no sellers, so sometimes the market will leave ahead of time, and that's okay. What I like to say in those moments, that's not our trade. Okay, that's really high risk trading right there. That's not our trade. We don't want to be messing with those things. We want to know the story for sure. We need to see the reaction of how the big boy plays his game. It is only then we can start to understand that, okay, I get what he's trying to do, and I'm in on it, and I'm going to be with him on his next step. Okay? All right, so I'll see you guys next week, and we'll resume from there. Cheers.
Okay, so welcome back, guys. So this week what we're going to be talking about is the extremes. Okay, now it also sounds extreme, right, this topic? But what it is, I'm going to walk you through first on what the extreme actually means, okay? So I'm going to take in the marker here. And first, we're going to go through logic. Always logic first, right? For you to understand anything really well, you need to understand the concept on the logic of why certain things need to happen the way they do. Hence, any definition we give to anything comes to life a little bit better, right? So let's take a look at this. Let's say the market is in a downward spiral, right? It's just coming down and down and down and down. Okay, in this process of downward movement, if I say you're a seller, as we discussed in the previous lessons last week, if I say you're a seller, at what point would you become a buyer? Okay, it's not here because you're still looking at it as a sell. It's not here because you're still looking at it like, what if this area holds? It's somewhere around here. Okay, so if here is where the buy is happening, okay, what do you think is happening here? More buyers are jumping in. More buyers are jumping in. Okay, so do you see how the money keeps accumulating more and more and more the further it gets? Okay, it's the same concept. I want to put $3 signs here, and then that's good. Okay, here we go. Same thing with here. On the sell side, maybe no one's in there. Maybe more people in here, more in here, more in here. Now, what I want you to understand with this concept is at the turn of the area that happens, whenever a turn happens in the market, no one is actually involved, neither is there much money involved to do the turn. Okay, but on the other side, there's more money flowing into this part. When it turns, the money slowly picks up. Slowly picks up. Okay, we call this the opportunity phase. Okay, generally what I coach my students on, especially the one-on-one students, whether they're doing any kind of business that they're doing, you know, even if it's real estate or they're trying to jump into any business that's coming to them, one rule of thumb is if it's an opportunity that you're hearing about and everyone is doing, it's too late. The moment it reaches your ears, chances are it's too late. Okay? When people talk about something, it's too late. The moment it's actually on the news, it's too late. Okay? So this is the general concept of trading. Everything that the average trader does, it's too late because until the moment it gets for them to understand when there's an opportunity, okay, it's too late. Okay, so let's dig into this a little bit more. I'm going to give you the flip side of an example. Let's say here's a buyer's market. Okay, in this buyer's market, see, everyone's still buying, right? Because they're using support and resistance and buying higher and higher and higher, and then no one's thinking of sells yet. No one's thinking of sells yet. Okay, we got some sellers coming in now. Okay, we got some sellers coming in. We got more sellers coming in. So it starts to increase capacity as it goes down. Okay, so why we like to say the extremes, what is the extreme all about, is I want you to start focusing on when there's an entire trend like this, focus on the extreme areas. Okay, it is not a set science where it's like it's got to be exactly that piece. No, the extreme is the end of the movement versus the end of this movement. These are the extremes. Okay, and in the next video we're going to go into a little bit more detail. So in this video, what I'm going to be talking about is why are the extremes so important. Okay, we talked about what is an extreme in the previous video, and in this video we're going to be talking about why is an extreme so important. Like, what is it about the extreme that makes things so interesting for us? So let's take a look here. If I take the marker here, let's say buyers are going up, boom, 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 boom. Okay, in this upward phase, slowly, when, let's say, you know, this is the big boy, right? As you've learned how any pullback that happens with the big boy flow, the market eventually goes with the big boy, right? The overall trend is your friend, all right? So people don't turn seller here, they don't turn seller there, but then more and more people are turning seller, right? Now the thing is, I want you to focus on, when we say the extreme is going to be somewhere down in these low areas where the money is starting to pile up, right? They're getting bigger and bigger chunks of money in here. The area what I want you to really put a focus on is in these extreme areas. I want you to keep a close eye on at what point is your big boy gonna step back in. Let's say he steps back in here, right? Like a V formation. Ask yourself the question, why? Why did the big boy step in here? Without any technical knowledge, why did he step in there? Was there enough money for him that was coming into the sell side? Was there a lot of money in there, what he was looking for? If that's the case, then that becomes your most valuable extreme, that last piece. It's so valuable that the big boy stepped in and said, aha, that's good enough for me. If it's good enough for him, it's good enough for us. Or her, of course. If it's good enough for her, it's good enough for us, right? So, when we're looking at this, here let me give you a downtrend example. Let's say the overall flow is down, right? Okay, this is the overall flow is down. And then no one's turning buyer yet. No one's turning buyer yet. Okay, some people are trying to buy. Boom, boom, boom. Boom. Okay. This area now becomes important to us because there was enough money in there for the big boy to say, I like it. I like it. Okay, when he returned the V formation, I like it. So what this does is this is starting to grab our attention of there's an extreme area there. Okay, now the reason why extreme areas get built like that is just a general flow of the industry. This is how it works, right? It's how the world works. So if I take a price scale, okay, when prices go way too high, no one wants to buy it. They need a discount. So extreme. When prices are getting into a discount, the lower they come, the more people jump in to buy it. Also extreme. Okay? So these extreme areas become important to us. This is also how support and resistance is created, right? True support and resistance, because let's say the market went up and then it bounced down. Well, that's an extreme. That means prices were becoming higher and higher and higher until prices reached this price, let's say 1.40. Just for as an example, they reached 1.40 and they said, that's too much. We need prices to drop. No one started to buy it anymore, and the store owner had to start giving a discount. Okay? They brought prices down to 120, followed by a further drop, and it's like boom, 1.00, and then it hovered around here, let's say at 90 cents, and then it took off again. Because what happens is people's memory remember this area, and they say, remember last time when it was 90 cents, it rose all the way up to 140. It can probably do that again, right? Remember in the last video I was talking about opportunity cost? How opportunity actually works, right? It's such an evil word. How opportunity actually works is somebody does something first and they become a massive success at it. And then the next person looks at it and hears about it and says, I'm going to do that too, because if I do the same thing he or she did, there is a chance it's going to happen again. Okay? It's the same concept in price as well. You remember last time prices came down to 90 cents and then it took off to 140? So that's an extreme. And when the prices start to rise back up, everyone's buying it, but when prices reach 140 again, what do you think happens to the people? Oh yeah, man, stop buying it, because when it's at 140, I know the store owner gives a discount. He did it before. He didn't give a small discount. He gave a discount that went all the way down to 90 cents. People remember stuff like that, right? They remember stuff like that. So, they make their shopping accordingly. Okay? And it's the same thing with smart buyers in the market. They use that information. So that's how support and resistance is generated. Okay, it's from that memory. You can call it market memory. Okay, it's like the new Tempur-Pedic, memory foam and market memory. So you want to keep these things in mind. Let's go on to the next video, and I'm going to show you these things on a chart. Okay, so let's take a look at this chart here. Okay, now remember that memory we were talking about, how people have a memory of certain prices when they get there. So just like supply and demand, the memory is not just once price reaches a certain area, for example this area, that it bounces again. The memory also happens, not only does it bounce from that price and turn around, but how much does he turn around? Okay, how far does he go with that discount? Okay, so if you take a look at this area, this extreme area here, look how far has he come with his discount. Okay, that's a pretty far movement, right? Before he had some sort of a V formation looking thing. So that's a pretty big movement. So that's going to hold an etch and memory in people's minds for a reaction. It's so good that our big boy decided to turn around, because who gets in on the buy here? Not many people. Who gets in on the buy there? A little bit more. Who gets in on the buy there? A lot more. And then if this a lot more is good, that means in this area there must be enough money in there for our big boy to say, I like it. Okay, and if he likes it, well, so do we. Okay, so that's why we look at it as an extreme, and it's important to us. Okay, now when we look at this thing area here, take a look at once you look at this extreme area here and see how far he goes. Okay, he gets this far up there. If you look at it to the right, that same area does react from it and goes up again. Okay, not so much this time. All right, so when you put all the stuff together, let me move these out. When you put all the stuff together, understanding the extremes helps with the market's situation. If I ask you situations like, you see this downtrend coming in? Okay, let's see where the downtrend started from, for example. Okay, here we go. So first it was an uptrend. Everyone's buying, no one's selling. Okay, then as this thing came in, people started to become some sellers. As this thing came in, people started to become more sellers. It came up on the news, then every Tom, Dick, and Harry became sellers. Big boy still not interested. So we're like, what's going on? More sellers kick in, and then here comes our big boy. Boom. Okay, you guys know what is a probe already by now, which is this area down here is a faker. And this area becomes very valuable to us. That's an extreme. We're not picking any of these areas in between from this entire trend. We're concerned about this extreme because this extreme has a lot of money in there. Okay, a lot of people selling that our big boy was so interested that he had to get in. Now, the thing is, when he bought those orders, he bought it so quickly, prices rose immediately because he has a lot of orders to fill in. So what we do is we hope that, I hope not all of his orders got filled in, and our big boy is not stupid enough to buy up here more orders, right? Okay, no big boy is that crazy. So he likes prices around this area so he can win again, because that's what he does. All he does is just win. Okay, he does not chase prices, and he does not buy with buyers. He only buys from sellers. So the next set of sellers come in, and we can look at it like, okay, well, how can we pick out the extremes? Does this ever have a value in the future? So if we extend this out, okay, we can see the big boy does actually step back into the future, right? So using this knowledge, this week what I just wanted to do was I wanted to introduce you to the extremes. Now next week, we're getting into the topic of timing. With this knowledge, what I'm going to do in the timing category is not only am I going to give you aha moments, but I'm going to give you mind exploding moments, okay? Okay, to show you areas where there's extreme precision, where it looks almost pinpoint. Okay, it's going to require a lot of practice, but I know you guys can do it. So still practice these extreme. What I want you to do in this week as homework, try to see if you can just keep your eyeballs just looking at the charts and be like, extreme here, extreme there, extreme here, extreme there. You know, just try to like start circling areas where the extremes start to happen, to get your eyes used to seeing the corners where the turns happen. Not stuff like this. Not like that. Nothing like that. Not like this also, because no one is getting involved in the buy side. Okay, that's an extreme there because everyone's jumping on the buys. That's an extreme here because everyone was a seller at one point. So stuff like that. I want you to start getting used to it and start to draw circles like that. And then we'll catch up again next week and we'll take it to the next level. See you then. Cheers.